Oh, hi, this is Joel Olson, reaching out with your variable rate update as we do every single week. So what do things look like this week? Of course, just a reminder here, the Bank of Canada changed overnight rate last week, a whopping 50 basis points, which is 0.50. You're going to see your variable rate increase by 0.50. Remember, that means that either your payment increases or the interest to principal ratio increases. By the way, which one do we recommend? We actually do recommend the one where the payment increases, except for in some situations where maybe it's a rental property, something like that, just because that's going to keep things going in the same range. We continue to not recommend locking in. It is much cheaper to stay variable. And if you have any questions on that or you're worried about that, there are some things we can mitigate, particularly if you really need to. You know, it's not our top recommendation. You could go to a static payment where the payment never changes. But anyway, that's what things look like today. Do watch our YouTube channel. I have another video on there that actually breaks down approximately how much the payment changes and how much it would change for each change, all that type of thing. So very important to be aware from that perspective. Now, again, we're not recommending locking in. We're recommending staying the course. Do we think that rates are going to go up again? Next meeting is the first week of June. And I think that right now we already have data that shows the market has slowed meaningfully in March, and that's prior to a 0.50 rate change. So I think that that is probably the case that we would, we would see some further impact, and a more balanced market, seems to make a lot of sense with what's going on now. Although I remain steadfast in my idea to not lock in and to go variables, I want to review a couple strategies, maybe that we've chatted about, maybe I've alluded to on videos, that you could do. Most people migrate to the 5-year fixed term. Now, reason we don't like fixed rates is because of the penalty situation. So if I have a penalty situation and I cannot get one over to a variable rate, why am I thinking about a 5-year fixed rate? I could be thinking about a 1 to 2 year rate. Do I think that's a good idea? No, I think the variable is a better idea. But if I couldn't get myself off of a 5-year fixed rate, I could go the 1 and 2 year terms, which means that I would have a lower rate and a lower penalty in particular. Isn't that much of a lower rate? I don't think it's a good strategy. I don't think you're going to win. I'm just saying I think it's a better strategy than a 5-year fixed rate. Now, I can also flip that and go if I say, well, I think rates going to just go really, really excessive and rates going to go much higher during in the next little while and during the next subsequent years, what could I do? And I was, this would trigger a much bigger penalty. So again, not recommending this either. But if I was sure and I could swear upside down that I'm never going to leave my property, I could do a 10-year fixed. 10-year fixed, sitting about 4.5 these days. And that means that I would never, ever have a different mortgage payment. Do I recommend a 10-year fixed? No, I don't recommend a 10-year fix either. I'm just saying I recommend a 10-year fix and a 1 and 2 year fix over a 5-year fixed. So that's some important considerations as well. So anyway, that is your variable update. We continue to recommend you stay in the course. Now, if you haven't had a chance to maybe go through your personal mortgage options with me, please feel free to do so. I'd love to go through that. Now, again, the last one I'll put it there, if you have a variable rate and you're seeing prime minus 50, prime minus 70 or whatever it is, you could, or probably a little bit, prime minus 20, we could do a payment reset on that. Now, here's a strange thing that maybe I haven't highlighted as well. If you did a refinance in the last 12 months, that's a different type of securitization of loan. And so it means it's more expensive. Now, if I take that loan and I transfer it to another lender, that's called a transfer. So I can get a better rate from a new lender now that I'm not any extra funds, even though it's a short amount of time to the mortgage. So do talk to us about that. That's an option as well. As per usual, please make sure to subscribe to our videos. Share with as many people as you know. We love to get this information out there. If we can help you with any way, please keep us posted. Have a great day.